Good morning. I'm Benjamin Sullivan, and welcome to Market Monday for March 23rd, 2026. When everyone needs cash at the same time, even safe havens get sold. This is exactly what happened this week. Gold fell more than 7% in 5 days. That makes 2 brutal sell-offs in less than 3 months. It did not happen during a recession, though. It happened during a hot war. The instinct is to ask what went wrong with gold. The answer? Nothing. Here is what actually happened. On Wednesday, the Federal Reserve held rates steady at 3.5 to 3.75%. The Fed only signals one cut this year, at most. On that news, the dollar strengthened and real yields climbed. When stress shows up in markets, people tend to sell what they can. Gold, because it has a deep market and trades around the clock, is often one of the first to go. Not because it failed as a store of value, but because it succeeded as a source of liquidity. That pattern extended across markets. The S&P 500 Thursday closed at 6,590. It dipped below its 200-day moving average for the first time since May of 2025. Though international markets took a harder hit. The International Developed Markets Index dropped more than 2% last week. That follows a nearly 5% decline from the week prior. India fell 5.5%, Japan dropped more than 3%. These are energy importing economies with no domestic supply cushion. Over 80% of the crude oil that flows through the Strait of Hormuz is bound for Asia. When oil crosses $100 a barrel, it slows economic activity. The 2025 story of international outperformance is being stress tested. In an energy crisis, countries that are dependent on imports will struggle. Now let us shift to the other end of the spectrum. This week, a different kind of stress surfaced in private markets. Several of the largest private credit funds restricted investor withdrawals. Investors wanted their money back, but the gates went up. Liquid assets fell this week because they could be sold. Gated assets held steady because they could not be. One looks painful on a statement, the other hides the pain until later. This distinction matters. Visible price declines in liquid markets are temporary. Locked gates in illiquid markets are invisible, until someone opens them. Here is the forward look. On Thursday evening, Israel's prime minister made a significant statement. He said Iran can no longer enrich uranium or produce ballistic missiles, and pledged Israeli support to help the United States reopen the Strait of Hormuz. Oil fell in after-hour trading on the news. These are the first signals of de-escalation. The damage is real. The path toward resolution is starting to take shape. If you hold investments with multiple advisors, pay attention. This is when fragmented strategies can potentially become unaligned. When markets move this fast across this many asset classes, one team with the full picture could make a big difference by ensuring your portfolio is diversified, avoid overlapping investments, and be aligned with your long-term goals across your portfolio. If you or someone you know would benefit from getting everything on the same page, reach out to us. It only takes 15 minutes to start the conversation. That's all we have for you today. As always, thank you for watching this week's edition of Market Monday. Join us again next Monday for more of the insights that matter to your money.